The crypto market is facing a silent killer, and it's not a whale or a hack. It's the relentless pressure of macroeconomics. A shocking 3.1% inflation spike in the US has just sent a clear signal. The risk-off environment is back, and speculative assets like Shiba Inu are feeling the heat. Well, let me explain. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. For much of its history, the crypto market operated in a vacuum, seemingly decoupled from traditional financial indicators. However, since the major interest rate hikes of 2022 and 2023, the correlation between cryptocurrencies and macroeconomic factors, particularly US inflation and Federal Reserve policy, has become undeniable. Shiba Inu, as a highly speculative, high-beta asset, is especially vulnerable to this shift. The core mechanism at play is the inflation trap. When inflation rises, central banks like the Federal Reserve are compelled to maintain or raise interest rates to cool the economy. Higher interest rates reduce the overall liquidity in the financial system, making borrowing more expensive and reducing the capital available for high-risk, high-reward investments. Investors, facing a higher cost of capital and seeking safer returns, rotate their funds out of speculative assets and into less volatile holdings, a phenomenon known as de-risking. This environment creates a structural headwind for assets like Shiba Inu, which thrive on excess liquidity and retail enthusiasm. The current narrative is one of a market struggling to maintain momentum against a backdrop of persistent, sticky inflation. The critical event driving the current market pressure is the latest U.S. Consumer Price Index report. While some reports suggested a cooling, the core narrative being absorbed by the market is the persistence of inflationary pressure. According to analysis, U.S. inflation was projected to hit 3.1% year-over-year for November 2025, a figure that is significantly above the Federal Reserve's long-term target of 2%. This figure, whether a final print or a market-moving projection, has been enough to shift investor sentiment. The 3.1% figure is particularly alarming because it suggests that the Federal Reserve's previous efforts to curb price increases have not been as effective as hoped, leading to renewed speculation about future monetary policy. The market is now pricing in a higher probability that the Fed will be forced to maintain a higher for longer interest rate environment, or even consider further rate hikes in early 2026. This is a direct reversal of the pivot narrative that many crypto investors had been hoping for, which would have seen the Fed begin to cut rates, thereby injecting fresh liquidity into the market. The official data release, which is closely tracked by financial news outlets, has confirmed that the battle against inflation is far from over, and this reality is now being reflected in the price of risk assets globally. The market's reaction to the renewed inflation fear has been a clear move away from speculative assets. Shiba Inu has underperformed compared to the broader crypto market. In the hours following the inflation news, Shiba Inu's price dropped by approximately 3%, settling at a value of around 725 units. This price action is not an isolated event, but part of a larger trend of de-risking. The 24-hour trading volume, which has been hovering around $160 million, saw a temporary spike, indicating that the drop was accompanied by selling pressure as investors liquidated positions. The market capitalization, currently at approximately $4.41 billion, has also contracted, reflecting the overall loss of value. The key takeaway from the price reaction is the token's high correlation with risk appetite. When the macro environment signals caution, investors are quick to sell their most volatile holdings first. The inflation news acts as a powerful psychological trigger, reminding traders that the cost of holding a non-yielding speculative asset like Shiba Inu is high when safer, interest-bearing assets become more attractive. The failure of Shiba Inu to hold key support levels in the face of this macro headwind confirms that the inflation trap is a dominant force in the current price discovery process. The technical evidence on the Shiba Inu chart and on-chain data confirms the impact of the macro fear. Technically, the price action has broken below the 50-day exponential moving average, a crucial indicator that often separates bullish from bearish trends. This technical breakdown, directly coinciding with the inflation news, suggests that the macro factor has overridden any short-term bullish momentum from ecosystem developments. On-chain data reveals a subtle but significant shift in investor behavior. While not a massive whale dump, there has been an increase in the flow of Shiba Inu tokens from private wallets to centralized exchanges, a move that typically precedes selling. This indicates that a segment of the long-term holder base is repositioning their assets in anticipation of further market volatility driven by the macro environment. Furthermore, the number of new Shiba Inu addresses created daily has seen a slight decline, suggesting that the inflation-driven risk-off sentiment is deterring new retail investors from entering the market. The technical picture is one of consolidation under heavy pressure. The 750 unit level is now a critical battleground. Failure to defend this level could lead to a swift retest of the 700 unit psychological support, as the market attempts to find a new equilibrium that accounts for the persistent 3.1% inflation risk. Analysts are unanimous in their view that the 3.1% inflation figure is a major headwind for Shiba Inu. The primary implication is that the token's price will remain capped until there is a clear and sustained decline in inflation. As noted by analysts, the persistent inflation means the Federal Reserve is unlikely to ease its tight monetary policy, which is the lifeblood of speculative markets. The analysis suggests that Shiba Inu is being treated as a duration asset, meaning its value is highly sensitive to changes in interest rates. When rates are high, the present value of future gains is discounted more heavily, leading to lower prices. The implication for Shiba Inu is that its fundamental utility, the growth of the Shibarium ecosystem and the token burn mechanism, is being overshadowed by the macro narrative. The market is not rewarding fundamental growth because the overall financial environment is punitive toward risk. The only way for Shiba Inu to truly decouple from this inflation trap is to achieve a level of utility and adoption so massive that its internal demand outweighs the external macro pressure. Until then, every CPI report and every Federal Reserve meeting will continue to dictate the token's short-term price action. The Shiba Inu community, or the Shibarmy, has reacted to the inflation news with a mix of frustration and a renewed focus on the project's fundamentals. On social media, discussions have shifted from celebrating small burns to debating the Federal Reserve's next move. Community members are increasingly aware of the macro link, with many posts discussing the need for Shiba Inu to become a true inflation hedge rather than a risk asset. Developer reaction, while not directly commenting on the 3.1% figure, has been to double down on the utility narrative. Core developers have continued to push updates and announcements related to Shibarium and the ecosystem's decentralized applications. This strategy is a tacit acknowledgement that the only long-term defense against the inflation trap is to build a robust, revenue-generating ecosystem that can attract capital regardless of the macro environment. Community trackers show that while the overall sentiment has dipped, the conviction of long-term holders remains strong, with many viewing the inflation-driven price drop as a temporary setback or a final shakeout before the next bull cycle, provided the inflation narrative eventually cools. The forecast for Shiba Inu is one of continued pressure until the inflation narrative changes. In the short term, spanning the next 1 week to 1 month, the price is likely to remain range-bound between the critical support of 700 units and the resistance at 780 units. The key watch point is the next set of economic data releases, particularly any commentary from Federal Reserve officials that could signal a shift in their stance on inflation. If the Fed maintains its hawkish tone, Shiba Inu could see a further decline. For the long term, spanning 3 months to 3 years, the forecast remains tied to the decoupling potential. Analysts predict that if inflation can ease to around 2% by mid-2026, the risk appetite for altcoins like Shiba Inu will return, potentially leading to a significant rally. The long-term risk is a prolonged period of stagflation, where high inflation and low growth combine to keep speculative assets suppressed. Investors should watch for a sustained drop in the official CPI number and a corresponding increase in the total value locked within the Shibarium ecosystem as the most reliable long-term bullish indicators. A balanced opinion on the inflation trap must weigh the immediate macro risk against the project's internal development. The primary risk is the systemic headwind created by the 3.1% inflation. This is a force that Shiba Inu cannot fight alone, and it will continue to suppress the price regardless of positive news from the development team. The cautionary points include the fact that Shiba Inu is not a store of value like gold or Bitcoin, which some investors view as a better hedge against inflation. Its value is derived from speculation and community, making it highly sensitive to liquidity conditions. The neutral insight, however, is that the current pressure is a market-wide phenomenon, not a Shiba Inu-specific failure. The inflation trap is forcing the project to mature and focus on utility, which is a long-term positive. The event serves as a crucial reminder that in the current financial climate, investors must pay as much attention to the Bureau of Labor Statistics as they do to the Shibburn tracker. Ultimately, Shiba Inu is caught between its meme coin origins and its utility-driven future, and the 3.1% inflation spike is a harsh reminder of the external forces that still control its destiny. So, there you have it. The 3.1% inflation spike is a harsh reality check, proving that Shiba Inu is still firmly caught in the macroeconomic trap. The price is under pressure, but the community's conviction remains the final line of defense. The question now is, can the Shibarium ecosystem grow fast enough to decouple from the Federal Reserve's grip? We will continue to track the CPI data and bring you the very latest updates. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.